Welcome to the show. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. I'm with the wealth management firm Client First Strategy. I've been doing this for over 30 years, so I know a thing or two about markets. And sometimes you have a day like today. I know the most noteworthy thing is the stock market took off like a shot, but more importantly, a lot of the cyclical type of stocks, semiconductors, industrial type companies, consumer discretionary, the ones that took the biggest beating that would be hurt the most by tariffs, in particular the giant tariffs on China, are the ones that rallied the most. The stocks that rallied the least or went down today were the safety ones, the consumer staples, the ones that would be considered recession resistant, uh, that were less subject to seeing their earnings and revenues be impacted by tariffs. So we got a bit of a flip. Safe havens went down today. Gold went down. Last I checked, crypto was down, but gold went down, and the price of bonds went down. Interest rates went up a little bit. So actually, they went up quite a bit today. Today was the biggest rally in the stock market since April 9th. That was 1 week after President Trump's Liberation Day when he announced reciprocal tariffs. That was April 2nd. April 9th, he put a 90-day pause on that, and stocks had a huge rally. They kind of drifted a little bit lower, but still off their lows of the year. And today we're just about, maybe actually, I think we're a little bit higher now than when we were April 2nd, Liberation Day. We're still about 5% off of the market peak. But you know what? 5% off the market peak is not exactly a huge deal. That's like, that's just normal volatility. So let's just break this down, because today was a day that there was so much news going on. Uh, there was so much news that it's really, I don't think it's going to serve your time for me to go into every single big announcement today and harshen that. I'm going to give you my overall perspective on the day, and what normally would have been perceived as big news in and of itself, which is President Trump signing an executive order to bring down the drug prices this morning. That alone would have been a big newsworthy event. But because the news is so fast and furious, it's just a fire hose of big news, that even that big piece of news was like minuscule on the day. Let me just roll a quick intro, and then we're going to talk about a couple things. What I want to do is add some perspective. We've been talking about how I'm not particularly worried about the stock market. I've been saying that the whole time. I'm not that worried about the market. The stock market will recover. Big stocks, big companies will continue to do okay, in my opinion. That's what I've been saying. So you know it. I've got the receipts. I was concerned about the economy. I still am. I think things have changed permanently, but I think it also highlights an awareness of things that were going to change about the economy, Trump tariffs or no Trump tariffs. Nevertheless, it's a good day for investors, and it's a good day for those who are hoping to avoid a pretty severe recession. Here's the intro. Stick around. All right, thanks for joining me. I'm Mitch, and you're watching Be the Boss of Your Money. So, big thing is we now have tariffs, 145% on Chinese imports, and China put 125% tariff on American imports into China. Those are so high that they're basically cause a complete. Those are so high that they basically cause a complete stoppage of trade with China, and it's what Trump did today with China. And I just think what happened really was that we went to negotiate. Treasury Secretary Scott Bessent and James Greer, our one of our negotiators, I forgot his exact position, but you could remind me in the comments. And by the way, leave me a question in the comments. If you have any questions, please ask me there. Give me a thumbs up while you're watching. It helps spread the good word, and other people in your network will see the show and they could learn from it. And I get to see who's out there, not just by viewer count, but actually who's out there. I would love to see that, and I appreciate it very much. But the negotiations with China took place in Geneva, Switzerland. They were expected to be not very smooth, maybe maybe just to get a framework started, but they came out with a pretty solid, at least a solid pause, a 90-day pause on the really big tariff number. And we went down to a basic 10% tariff on each other's goods. That does not sound like uh, a better deal. It it doesn't sound like a better deal than what we had before. I know you're hearing 30% tariff on Chinese goods coming to the United States. That is true. It's 10% base tariff, which we're keeping as far as Howard Lutnick, Treasury Commerce Secretary, says. That's our base for everybody's. Anything coming to this country gets hit with a 10% tariff. There's an extra 20% tariff on Chinese imports to push China into tamping down on that country exporting the precursors of fentanyl to our country. We'll see how that works. I think the big thing with that will be the de minimis rule of imports that will be much more money. See, China doesn't actually send us fentanyl, they send us the precursors, and then Americans take those precursors and then send those over to Mexico, and then it's easy to turn those into fentanyl, and then they send them back to the United States. It's fentanyl is a global business. It's not just between two countries. All right, but we digress. So what you saw today is panic about a recession turn into elation, um, into elation about avoiding a recession. Now we could still have a recession. I really wouldn't be surprised if we see another quarter of negative GDP. I wouldn't be surprised about that at all. We were expecting a real shortage of goods, which would have created more inflation because of scarcity. We could still see some inflation because tariffs get passed along to the consumer. Just remember, businesses pay the tariff money. And when businesses' costs go up, they could do three things. They could cut their costs somehow, do their best to cut their costs. They could absorb the cost of the tariff, or they could pass it along to the consumer. I think you get a combination of all three. Some companies will do a combination in different ways. Some will say most of the costs will be passed on, a little bit of the cost will be passed on. Some companies will be able to eat more of it. Some companies won't. It'll be on a case by case basis, but this takes the deep recession worry off the table for now. It's a 90-day pause. The pause actually, I think, starts Wednesday this week, even though right now it's just Tuesday. But Monday, I'm distracted. People calling during my live stream. How dare you call me during my live stream? So it'll take place on Wednesday. I think today's Monday. The point is it's going to take place. Now, the next big hurdle is July 9th, is when the 90-day pause on reciprocal tariffs on the rest of the world ends. My sense is you'll see another 90-day pause. And that's what we're going to do. We're going to keep getting pauses for certain countries, for certain regions, trading blocks, until negotiations start to fall in place and we start getting frameworks. We have a framework with England, not a tried and true trade deal, but a framework with the United Kingdom. They're working on it now for China. And what else could be said for that? We'll see. But if you're expecting a deep recession and stocks in particular, consumer discretionary, industrials, financials, and technology, if we're going to see a recession, those earnings of those companies would get lowered a lot. They would do very poorly, and it means the stock prices would go down. Well, if we're going to avoid a severe recession, the stocks are probably sold off a little bit too much, and they recover. So this is a bounce back rally, in my opinion. Interest rates went up a little bit, but that's because the flight to safety was reversed a little bit. So money that was in bonds went back into the stock market. Money that went into gold and silver went back into the stock market. In other words, risk on assets. People were diversifying away from dollar assets. So what they were doing is they were putting money into things like gold And gold was down a little over 3% today, and Bitcoin was down almost 2% today. And bonds were off a little bit. Interest rates were up a little bit. So that just goes to show you that the safe haven trade reversed a little bit. So it was just a very sharp reversal in terms of investor sentiment. And once last night we saw the Dow futures up like 400 or 500 points last night. You knew we were setting up for a good morning, but once the market got away very quickly, we opened up 1,000 points in the morning. You knew that there was going to be a lot of short covering and a lot of investors caught off sides that got too conservative, too much cash, too much consumer staples, and they decided they needed to start putting money back to work. Keep in mind, we are just about midway through the second quarter, and if we are going to have a positively performing quarter this for the markets, in particular the S&P 500. By the way, you can't invest into an index, but you could invest in a security that tracks or mimics an index. What we'll see is performance chasing, because now people are looking to get back in, and now they're looking for a way to save face and get back in without looking like they're chasing. Luckily, you watched the show, so we didn't really have to worry about that, because we believe that you invest for the long term. We believe your investment decisions should be made based on when you're going to start taking your money out of the stock market and use it to actually pay your bills in retirement. And that's a glide path that we start well in advance of your need for the money. And it's really just not impacted by what the stock market's doing on a quarter to quarter, a month to month, a week to week basis. Not even a year to year or multi-year basis. We're really long-term thinkers. So that's it. That's what happened. It was just a change of expectations from everything is horrible to things, maybe they won't be as horrible. And now stock sold off too much and we need to start putting the money back into the market. And once that feeding frenzy started with investors just buying everything, it kept going all day, and people don't want to miss a good rally, especially when stocks were down a lot. And we just had a really good earnings season. Earnings for the first quarter came in pretty solid. So if earnings are maintained and the market went down, valuations improved enough to tempt investors to say, we need to put some cash to work. All right. That's basically what happened. Thank you so much for watching, and I'll be back tomorrow with another update. Have a nice night.